Hello, welcome back. Hope you are having an awesome Friday and getting ready for the weekend. In this video, we're going to talk about a topic that I think is rather interesting. It was brought up today in our Discord channel, and I thought this would make an interesting video, a nice topic to talk about. This is about gold and whether it's a nice investment, a potentially good investment to actually get into right now. So, what is gold, and is it a good investment? Is it a bad investment? Should we avoid it? What's the deal with it? And how does it compare to the rest of the stock market, for example, like the S&P or the other stocks? So the most important thing to understand is that gold is a commodity, and you may have heard that from multiple sources, like oil is a commodity, rice is a commodity. So what is a commodity? Now, obviously, you can get a very specific, a very specific idea of what a commodity is with all the examples here and the key takeaways. But the most important thing to know about a commodity is that it is basically let's consider it like a material, for example, or a product that can be offered by various people, and it's always the same or practically the same. So, for example, oil. If you have different oil companies, they offer the same thing. They offer oil, right? But if you're buying a mobile phone, a cell phone, this is not going to be the same. If you buy an iPhone or if you buy a Samsung phone, it's going to be a different thing. So it depends on the actual producer on how this is going to be, this kind of product is going to be. A commodity is typically the same or slightly, may have some slight differences, but rice is rice pretty much, or apples are apples, and I don't know, like silver is silver, and gold is gold. So the important thing to understand there is that the value of these commodities comes from the scarcity of them. And so, for instance, when we have less and less gold in the earth, then the price of gold will actually increase. And also there are some other factors, like for example inflation, because gold is actually not affected by inflation. The price of gold tends to rise when you have inflationary periods, right? There's like no interest behind it. There's no gold doesn't really bear any salary, doesn't really bear any income. It's basically just the commodity itself, and this is why you are looking at it rising in times of turbulence in the worldwide economy. So this is what a commodity is. The next thing to see, and the thing that I wanted to talk about, is gold. And you can take a look at goldprice.org and discover the chart of gold, how gold has been moving through the years. And you can go back to 1974, for example, and take a look at this data. And you will see that for many decades here, actually gold was sitting at a similar level, not really going up that much, till it actually skyrocketed and almost creating a little bit of a base over here right now, but a higher one, which typically tends to happen with pretty much everything, like everything that has some value, just because of inflation itself basically brings up the prices when you actually compare it to the dollar, right? Because we're not talking about inflation in terms of the gold itself, but inflation in terms of the relationship between gold and dollar, and obviously dollar basically gets lower in terms of value every year, so you need more dollars to buy the same gold. So as you'll see here, it's only recently that this has started to skyrocket, and the thing that I as a potential investor here I don't really like is the fact that it is on all-time highs. So that's one thing to bear in mind before actually deciding to potentially enter here. Now, one thing to really understand is that you will be seeing a lot of different channels, like on YouTube or in all sorts of different sources, claiming that you should be buying tons of gold, and the worldwide economy is collapsing and all that, so you should be too much into gold and all that. Now, we have to take the voice of reason here and be cautious and just look at the data. And this is what we're doing in this channel, hopefully. So gold is good to hold, but you have to know that it is a hedge. It's actually an insurance. It's not really an investment per se. So what does that mean? When you are buying, let's just say, stocks, for example, you have some risk, and obviously the stocks also move in comparison to bonds, the interest rates, inflation, and everything that happens in the worldwide economy. So buying gold is basically a hedge. And what does a hedge mean? It's actually an insurance policy. It's the opposite. So if the thing implodes, if the stock market actually crashes, for example, then more than likely the price of gold will grow higher. It's going to be a reaction by people buying more gold just because of the reasons that I mentioned earlier. And so by buying a little bit of gold, you're basically buying a little bit of an insurance for your other assets. So buying, just having some gold in your portfolio, maybe 5%, for example, I probably wouldn't go more than that, is wise as an overall investment, especially if you have tons of money in the stock market, for example, and you want to hedge against that bet that you are taking, against that investment that you are taking. So that's the important thing about gold and how it behaves. The problem with gold is that it is not really an investment. Why? It is not really an investment because it's not yielding any new, how do you say, any new income. It's not yielding any new free cash flow. It's not yielding any new net income, nothing, no revenue. It's not really creating things for the economy. It's just sitting there and it's the same thing. Gold today is going to be the same gold 10 years from now, 100 years from now. It's going to be the same thing. So it's only the market forces that are changing its price and not really the act of it producing income. That's very, very important. And it's basically probably the most important thing about investing. You need to be holding assets that are actually bearing income. It's a holy grail, really. Free cash flow, remember, it's what we're all for in this channel. Now, some other interesting things here and things that I have made actually explicit videos about. For instance, Nugget. Now, Nugget is actually an ETF. And what is an ETF? It's a collection, it's a basket of investments, basically, right? So this one is actually trying to mimic gold, the price of gold and the movement of gold through the daily chart, pretty much. But it's actually a 2x. And again, I have made a video where I'm talking about this effect. I'm going to be linking it at the end of this video if you are interested in learning more about it. But there is an effect that is called the decay effect. And Nugget used to be a 3x. What does that mean? Now it's a 2x ETF. What does that mean? It means that if the price of gold, let's just say, is up 5% for the day, this is going to be up 10% for the day, like 2x. And when it was 3x, it would be 15% up for the day. So that's how it works. And the same with dust. And dust is actually the sort of like the bearish gold ETF. Now, why is this a problem? Like, if you go back, let's say 6 months here, you will see, okay, this is going up, this is going down. Let's just go back a year. Again, kind of up, kind of down, about the same place here. So what's the deal about? What's the fuss about it? Let's just go back a little bit more. 5 years now. So over here, it used to be like 200, for example, right? And then it started going lower and lower. Okay, this can happen. But let's go to the max. And now you see how this behaves. This is down almost 100% all the time. Why? Because of the decay effect. Again, I'm going to be describing the decay effect in a separate video, which I will be linking at the end of this video if you're interested, because I don't really want this video to go on forever. But if you're interested, take a look at this one. But you will see that this is actually going to pretty much zero, and that's the purpose of it. But if you're not aware of how these things work, and if you haven't watched the video that talks about the decay effect, for example, you may be actually trapped. You may be trapping yourself by buying these kinds of 2x or 3x ETFs. So be very careful. I wanted to talk about this one a little bit briefly here. But again, take a look at the video that I'm going to be actually linking to at the end of this video. Now, what about gold as an investment for the long run? You can kind of compare it and see what has happened through the years. And this is exactly what we have here. So over here we have the Wilshire Large Cap, which is pretty much an ETF here. Now this is a little bit biased because it's the large cap, and not everybody will be buying the large cap. And of course, it has a lot to do with what has been happening with, for instance, the large tech companies throughout the last decade, maybe 15 or 20 years actually. And so this is actually going to be much higher than expected. But what you could actually compare it to is the S&P 500, for instance, which is the red line here. And you can see it clearly, the S&P 500 and the Dow Jones, basically about the same thing. And then the yellow, or the yellowish one, is gold. And you will see that it's significantly lower again. You will see that it's significantly lower pretty much every time, as you'll see here. And this is why, if you are actually aiming to invest in gold instead of the S&P 500, for example, which is the baseline investment, you're probably going to lose through a large period of time. Now, of course, there's going to be ups and there's going to be downs, and if you're lucky and you actually bet that the worldwide economy is going to completely crash and implode, and then all of a sudden gold actually skyrockets, then again you almost played it sort of like a cryptocurrency, right? So you got a little bit lucky. But as an investor that is looking to invest for many years to come, and you don't really want to bother and basically have a crystal ball and to try to guess what is going to be happening in the upcoming years, it makes a ton more sense to actually invest in the S&P 500 itself as an index fund than gold. Because the S&P 500 fund, for example, apart from the fact that it provides dividends, which is basically passive income, it also contains companies that grow through the years. And actually, these companies yield free cash flow. Again, the holy grail of investing. Super, super important. While gold is going to be the same. It was gold here, it's going to be gold here in 2023, gold in 1975. Same thing. Okay, and you can kind of see exactly the gold prices that like the 100-year historical chart as well, and compare it to the S&P 500 90 or 100-year historical chart, and you will see that the S&P 500 has been doing significantly better, while the gold chart has been having its ups and downs, with some periods in between, especially when there were crashes in the stock market, pretty much doing really, really well. And I believe these grayish areas are pretty much the crashes, when crashes happened in the worldwide economy. And you can kind of see the movements here of gold and what happened there. So this is what I would think about gold, and this is how I would actually act around gold. I wouldn't buy it for an investment. I would trade it for sure, but I would have to trade it when it would be low. Like I wouldn't buy it now, no way. I would have to buy it like over here, for instance, like when it was around these levels, when nobody wanted it. So right now, as it's actually, there is like some discussion about the economy is failing and all that, more and more people buy it. And also remember inflation, right? Inflation urges more people to buy. This is not the time for me to buy as an investor. Now, as a trader, it's a little bit risky. Like you could potentially swing trade it and actually potentially bet on maybe inflation going up higher and interest rates going up higher eventually. So this could propel it a little bit upwards. But again, you're kind of betting that the worldwide economy will implode. So if you take this kind of bet, it probably doesn't make sense to be holding any stock. So, it's basically the contrarian, the person who is actually thinking that the world will basically collapse, or at least for a while, at least the worldwide economy will collapse, which could happen. It happens sometimes through the years, but it's not the way to invest, it's the way to speculate, frankly. So that's what I wanted to talk about. Hopefully that gives you some ideas about gold. And again, remember that I linked in, I'm going to be linking to the video that I talked about earlier, the one that talks about the decay effect in more detail, in case you are interested in learning more about it. But thank you for watching this one, and have an awesome weekend. Bye-bye.